Welcome everyone. In this video, I'm going to go through the guidance that Meta provided in Q3, and I'm going to highlight some of the most important items that I noticed, because there are quite a few that really, don't get enough media attention. I don't know if you know that some of the items were actually upgraded and some of them were downgraded. So let's start with the first one, which is, the statement on AI compute capacity. The investment is going to be aggressive, and that is going to include both infrastructure and third-party cloud deals. By that, I mean the deal with Reuters, 14 billion in AI infrastructure over 5-6 years approximately, and there's an option to expand up until 2032. So in regards to the remarks related to CapEx, well, there were some items in the Q&A that caught my eye. For example, Mark said that if it takes longer, then the company is going to use the extra compute to accelerate its core business, which continues to be able to, to use more compute than they have been able to throw at it. This is telling me that if the company is investing too aggressively in CapEx and they have more capacity than what they need, eventually they're going to catch up. And currently, it seems based on these statements that they need compute, and the current rate is not there. So I will expect the company to be supply constrained, possibly from a power perspective, over the next few years. I don't see capacity improving because capacity compared to demand. So you look at demand is exploding. You look at capacity is constrained by power, and of course by the long time frames to build a data center. Speaking of which, one of the data centers, Hyperion, is going to be ready next year, and this one is the first data center that is going to be over 1 gigawatt in capacity. This is one cluster. So quite big announcements. So yeah, ahead, the picture looks relatively fine. The next one is on the AI glasses. It's not a big revenue driver, to be honest. Overall, the company is not expecting to grow Reality Labs in Q4. And even though AI glasses, they guided significant year-over-year growth in Q4 25, and they see traction. So from his comments, I think this was Mark's, during the earnings call, he says that the new Ray-Ban Meta glasses and the Oakley Meta Vanguards are both selling well. They sold out in almost every store within 48 hours, and demo slots were fully booked through the end of next month. That's fine. It's a good sign, but I wouldn't expect to see massive upside from AI glasses, at least now. I think they're going to be big once AI kicks in, because I think Meta is looking at personalizing AI to each user. Meta is not looking for the same goals as OpenAI with ChatGPT, trying to be the frontier model for science, discovering drugs, discovering any scientific method of development. Meta is not going into that venture. Meta is going into the user venture. And they released Vibes in the last quarter. They had good traction. I think I don't have the actual figures for that. I reviewed it in a previous video. Let me just go quickly to see if I have anything on Vibes. There you go. So this was in Q3. Vibes retention was looking good. Usage was growing quickly, week over week, and there was a ramp planned over the coming months. And in regards to Meta AI, it already exceeded 1 billion in monthly active users. Not bad, if you ask me. So yeah, Vibes launch led to 10x increase in media generation within the app. This is key. This is one of the statements that actually caught my eye because, well, if Vibes is leading to a significant increase in media generation, generating media is several orders of magnitude more difficult than generating text. If you are in Meta AI, in WhatsApp, and you ask WhatsApp to summarize one of the chats that you had with a friend, that's nothing compared to asking Vibes to shoot a video, a 15-second video on something that's quite complex. That is going to take 2 to 3 times more. Sorry, an order of magnitude of 2 to 3 times. No, 2 to 3 order of magnitudes the amount of compute than just text. So that's something to consider right there. And yeah, moving on, we have capital expenditures. This one was upgraded. So as you know, CapEx was guided for full year, fiscal year 2025 since January. So CapEx was in the range initially 60 to 65. It was upgraded massively to 64 to 72. This was a huge increase. And then the top end remained the same. However, the lower end of the range, it went up progressively. Yes, so from April to October, it went from 64 to 70. So now the midpoint is 71 billion in CapEx. And as you can see there, it was upgraded in each and every single quarter. And well, you can see the rationale here. GPU purchases, management said that in 2026, CapEx is going to be notably larger. I will assume it's because of the deployment of maybe the GB300s. I'm not sure whether Meta actually is deploying them right now. So if I just do a quick search by Blackwell, I don't have any information here for Blackwell, but I think there was something in regards to the Blackwell, something stating that. Let me just have a look now. Blackwell, NVIDIA, Jensen Huang. So there you go. Is he saying anything in regards to Meta? No. I think there was a press release from back in May this year saying that, Meta was not that active with Blackwell deployments. Although, of course, that changed because you have the ramp of the GB300s over the past quarter and a half. So likely Meta secures some contracts because the CapEx is huge. I mean, 60, 65 billion to 70 to 72. That's a huge increase in the midpoint. All right, moving on. There was a downgrade. So UE, this is it's something weird. I mean, in Europe, I don't see a lot of, capitalism. I don't see a lot of, I see too much restrictions due to law and due to, regulations, which is, of course, leading to businesses running away. That's why you have a stock market in the US and you don't have anything outside. Who is going to buy a European-based company? Who's going to mess around with that stock? I wouldn't. So EU DMA, all right, this is the digital media advertising. So essentially, the company is saying that they expect to have material losses, all right, due to a DMA-driven risk around its less personalized ads and pay or consent model that they have in Europe. And the company is appealing rather than implementing the changes. So this is big because the company is not, bending his hand to Europe. The company is actually giving them the F, is giving them the F word. And they are essentially appealing to the European Commission. Of course, they have, in my view, they have little to no chance to win. So the CFO said that, these matters, especially in the EU, could lead to significantly impacts in our business and financial results. And in the EU, they noted this less personalized LPA. And she said, we cannot rule out the Commission imposing further changes to that offering that could have a significant negative impact as early as this quarter. That's big. That's big because, if you suddenly have a massive charge, and if you scroll down in the latest developments back in June this year, you can see that daily fines could be up to 5% of the global average daily turnover if no compliance continues. That was the penalty from the DMA. 5% of the global average daily turnover, and that's in daily fine. Okay, so 10 days is 50% already of the revenue. That's big. That's big. And that's why the CFO has been reiterating this risk since back in April. And she has been stating that, LPA, this is going to be, one of the points to monitor. I haven't seen anything in the news section in regards to LPA. Any updates? No, nothing. Nothing yet. Well, the EU, on the positive side, it seems that they are easing parts of the AI Act, which could give them grace periods. Oh, to Meta, that could be cool. All right, but it's not related to LPA. So this is more for AI systems in the EU database when used only for narrow procedural tasks. Yeah, this has nothing to do with ads. All right, moving on. We have GPU deployments to significantly increase. And here is where I can see a downgrade. And the downgrade is not because GPU deployments are going down, but because the goal is possibly delayed for next year. So here is the rationale. If you look at the latest update, which is when this was downgraded, the context is showing that multiple gigawatt scale projects and energy procurements are progressing, namely the Hyperion, that's 5 gigawatt, and Prometheus, which is 1 gigawatt. And the initial goal, if you have a look there, is for 1 gigawatt of capacity to be brought online in 2025. And the company is saying that it's building an overall 2 gigawatt data center. Now, the issue I see is that management stated most recently that Prometheus 1 gigawatt cluster is going to come online next year. And the Q3 commentary points to the bulk of additional AI capacity coming online in 2026, implying that the original 2025 timeline has been pushed back. So I will keep a close eye to see whether the company is able to reach 1 gigawatt of capacity this year. This is going to be one of the key updates I'm going to look for in Q4, because if they don't, well, I don't think it's going to be a major sell-off because not too many people can look at this nuance. It's super nuanced. That's why I love this tool, is because it gives you such a high context on what's going on, and you can look at the developments, you can look at what management said, and it really helps you understand the narrative. By the way, this is the what I was saying back in March in regards to NVIDIA. So Jensen Huang said 3.6 million Blackwell GPU orders from top cloud service providers exclude Meta. So back then, when Blackwell was ramping, the orders came in, but Meta was not in that 3.6 million bulk. That included the other cloud service providers. So yeah, overall, I think Meta, could be using Blackwells to train the Llama models. I think it's gotta be, because otherwise, how are you gonna spend 72 billion in CapEx if you're not buying the Blackwells? What are you gonna buy? AMDs? I mean, come on. Moving on, Hyperion. This was one of the big projects, up to 5 gigawatt of scale, expected to be deployed over the next couple of years. Back in October, there was no update. So there is a joint venture between Blue Owl and the company. This is to secure the financing. I think I have the terms here exactly. So Blue Owl is going to fund to own 80% and Meta 20%. And then the parties are going to fund pro rata share of 27 billion total development costs, which, includes the infrastructure. So Blue Owl contributed with 7 billion in cash. Meta received 3 billion as a one-time distribution. And Meta contributed to land and construction in progress, entering a 4-year initial term with extension options. All right. 500 eventual operational jobs. All right. and provided a capped residual value guarantee for 16 years. Interesting. All right, perfect. Moving on. We have Reality Labs. So, well, there is one on Instagram. Possibly the algorithm is going to change. And it seems that the company wants to surface broader content, likely because, more people are going to use AI stuff. So, the more content you can surface, the easier it is to understand what people like. And now that you have LLMs, outputting really cool content, I think the company is going to be able to learn a lot, or, what are the preferences of users. Reality Lab, this looks bad. In Q4, the company expects this segment to be lower year over year, mainly because there was a bump in Q3 in regards to the Quest 3S. So the CFO, Susan Lee, said in the last earnings call that Q3 revenue was $470 million, up 74% year over year. Really good. However, there was a significant year-over-year growth was due to front loading. So, the retail partners, they were stocking up on Quest. That means that if they stock up now on Quest, they're not going to stock up in Q4. So that's going to hurt Q4 revenue. And also in Q4 last year, they had the Quest 3S. This is the headset that was released a year ago. And this year they don't have it. They have the Meta AI glasses, but they don't think that those glasses are going to compensate, the unfair comparison between Q4 this year and Q4 last year. So moving on, expenses. This is a big topic because we have, let's look first at the guidance. So we had 114 to 119. That was the initial range. When that went down, okay, so that's not particularly encouraging if it goes down. Then it goes back up, and then it gets up by, upgrading the lower end of this range. So this is how much the company expects to have in expenses, operational expenses in fiscal 2025. And of course, this is a big amount. So 22 to 24% year over year increase. And if we look at the street's estimates for Meta, if you look at the top line, for example, I believe, 21%. So revenue is going to grow slower than operational expenses. Is this an issue? Hell no, because we're talking about 200 billion of revenue. It's not easy to grow this amount. So you can see the growth rate is going to decrease over the next years. I think it's likely because consumer confidence, I wouldn't say consumer confidence, I would say consumer spending is going to go down because I see a lot of layoffs in the US, and Meta makes a lot of money right now from its advertisement business. So that can be a thing to monitor. Now, other issues include, it's not an issue. This one is an upside, apparently. So ads, I don't think it's a big upside. So you have the WhatsApp status. The company is going to plan to run ads on the WhatsApp status. So this is, if you're not aware, it's weird. I never check it. So this is on WhatsApp, and so it has a status. You press on that, and you're going to be able to run ads on that surface. It's weird. I don't use it. I don't know anyone that's using that, so I don't see a massive upside from that. And then there were more, cases in the US that likely are going to lead to a material loss as early as Q4. But I think the main one is the DMA. So this is the one that really makes me sweat. Nothing is clear so far. I don't know. I believe that this EU risk that was explicitly flagged by the CFO could be a hint, be careful, because if this shit hits the fan, we're going to have to downgrade our revenue expectations. And the last thing I want is halfway through Q4 to see a downgrade on the top line because of this fine. something to consider there. I hope I didn't make you nervous with this last one. Overall, I remain bullish on Meta. I mean, how can you not be? I mean, just look at price action today. We have finally the end of that shutdown, or the first, signs that this is going to end. And you can see the clear bounce on the 600 support level. This is a clear bounce. I mean, if you look at technicals, just look at this chart, you can see that 600 was acting like a resistance, then it was broken, then it was a resistance as well, and now it's a support. I think that shares are going to bounce from here, and possibly now that we have the shutdown overhang gone, I think this is going to rally. And I don't know, over 6 months, 12 months, back to all-time highs. I'm thinking to buy call options, although I'm not sure whether it's going to be Meta or other, maybe more speculative assets. So I'm going to have to look at that. I know call options are very expensive for Meta right now, and I'm not keen on that, even though, yeah, we'll see. We'll see what I do in the end. All right, thanks for watching the video, and I hope to see you in the next one.